All right, hey there. Chris Franks with Texas West Capital. It's a few minutes after 11 a.m. Central Standard Time here on Friday, the 20th of May, 2022. Coming at you live from Bernie, Texas. Good to have you all checking in. Oh, man. So this morning, got Bitcoin pulling back a bit. I can't even say it, right? This morning. So that makes it kind of interesting, as far as what we could potentially be looking at. So we've got that, but really still Bitcoin just kind of doing sideways since it made that low. The dollar kind of doing the same thing. The dollar may have, I've got it topped out as 3 now. So just been going kind of sideways since then, kind of pulled back a bit. Man, we got stocks still dropping. The index is still dropping there. We've got gold and silver rallied a bit, but then pulled back. Oil, I think, is finally doing its wave 3. Looks like wave 2 may be done. So we got a lot of stuff coming in. We'll see how inflation keeps doing. A couple of months ago I mentioned that I believe that was probably the top. And so then last month we actually dropped. So we'll see if we keep dropping. If we do, that means the Fed doesn't have to be as aggressive as they think they have to be with their interest rates, with rising interest rates there. And that'll help a bit, but I mean the markets have already kind of slowed down a bit, right? So housing was already starting to top out, oil was topping out. People had started pulled back, right? I mean we had these month over month wage increases, but they weren't keeping up with the prices, right? So they were still, even though they're making more, they were still having less available money to go after stuff. So a lot of that going on. We'll see that. Arthur Hayes is up for sentencing today on his whole thing, right? So usually, the BSA, the Bank Secrecy Act, violation of that. He pled guilty. Usually it's 6 to 12 months, federal prison. It has a maximum of 5 years, but most often violators of the BSA don't actually end up going to jail. So even the probation put forth a thing that said, hey, he should be on probation, not in jail. So, probation for a couple years maybe. So we'll see what happens with that. Of course, he requested that he be on probation and be able to travel internationally. That's kind of interesting. But I don't know if he's going to get all of that if he does that. Man, a lot of stuff going on today. How are you guys doing? Y'all doing all right? Dan, good to see you. Whittick is here. Oscar, what's up, man? He says SPX new low. Yep. Dana, what's up, man? Andrew Bennett is in here. Alex N, good to see you, buddy. Genghis Khan, what's up, man? I don't think I've seen you say anything for a while. Mike Slane's here. Chance, hello, sir. Always good to see you. Yeah, man, tier 3 checking in, right? Oscar, you're quoting Bon Jovi. Angry Patrick, what's up, man? Martin77 is here. Man, good to see y'all checking in. So yeah, we got a bit of stuff going on here. We'll kind of see where we're at. Angry says summer is coming. What do they usually say? Sell in May and go away, right? We'll see. I don't know. We'll see if that still kind of holds up this year. Bitcoin is rallying a bit right now. Not a whole lot. It's up $100 off the low it just hit. So we'll check on that. But, oops, let me get that back up there. Okay. Anyway, hey, listen, if you want to join us, you can do so. I'm going to tell you what right now, it is the absolute best time to join. You can get in test drive tier 3 with us. $13 for 7 days, guys. That's it. You are going to get well over $13 worth of education and whatnot in there over that 7 days. But you can do that. All you have to do is come on over here and then go up here where it says join us, and you just go through it, and you'll get to tier 3 here. And not only are you going to get 7 days for $13, but then you're also, if you stick around with us, you'll get your first month of tier 3 for half price. Instead of $199, you get it for $99. So, man, like I said, it is the best time to be checking us out right now. We've never actually done this before. So we've had quite a few people sign up, which is awesome. I'm sure most of y'all are just going to take this 13 days, though, or the 7 days, though, but it is what it is. But, man, you just can't beat the deal there. So we'd love to have you guys in there. It's howtotradetowin.com. You can actually go howtotradetowin.com /product tier 3 membership, the number 3, all one word, / and that'll get you there as well. So we'd love to have you in there checking us out, guys. HJ, what's up, man? Baltazar is there. He says this year it will be buy in May and walk away. Man, I hope you're right on that. I mean, there's a lot of stuff suggesting that it could be, but of course, a lot of stuff has to happen, right? So, what did I leave our Discord with this morning? Well, we had this breakdown. He said if we broke down below here, we'd be saying that wave 2 is still in progress here. And I gave him a couple of targets right here, and then the S1 pivot. And it's continued down. And while I was waiting for this to load up this morning, I went ahead and threw this 1 hour demand structure here. This right here, right off this wick. And as you can see, we're rallying basically right off the EQ there. So the 15 minutes really oversold. Your 1 hour, it's just above oversold there. It didn't quite hit oversold. Your 4 hour, you've got rolling over here and pulling back a bit. I'm going to tell you, that's one ugly 4 hour candle there. But it kind of goes with these two, these two 4 hour candles right here. Not a lot going on, just a lot of sideways right now. This is what I was talking about, guys. So after we made that low there, we're just kind of doing sideways here. But right now, the counts still hold. So what are we looking at? So here's what I'm looking at. If the bottom is in, right now I'm looking at the possibility that we've got a 1 up here, and then we've got a 2 down here, and then we've got a 1 and a 2. So we need to break out above wave X up here at 30,000. Oh, what is that? 30,512.98. We need to break out above that to signal that wave 3 is in progress. And if it is, that'll actually give us a target. Now I've got to change this target from this morning. I can't get that in there. Well, let's see here. Right around. Yeah, here we go. That's close enough. Oh, right there around this, say right here. 32,278.60. Come on, there we go. 32,278.60. So if we rally from where we're at, that becomes our wave 3 target, right? Wave circle 3 target. If this count holds up, then we've got a wave parentheses Roman numeral 3 minimum expected target up here at, man, I had that in there. What did I do with it? This looks like if this holds here. Oh yeah, that'll be this up here. Yeah. So up here at around, man, oh man. Did I mess this up? Let's see. I think I might have messed that up first. Yeah, up there around 38,500 or so. But that'll be the this one right there. Now, it doesn't have to be that the bottom's in yet, right? It is possible that maybe, again, this is wave 4 over here playing out, right? So maybe wave 3 ends down here. This is wave 4, and we've still got wave 5 to go, right? And so in that point, I think it's possible that maybe we have like an A and a B. And I think it's going to have to come up here for a C. But if it breaks out above this swing high up here, this, what is that? This 31, 418, 35. If we break out above that, that invalidates the triangle, right? There's no wave 4 triangle. But it could still be like A, B, and C. And, so we could still have a wave 4 rallying up here toward the daily S1 pivot up there around 34,341. I think generally what we would do is just, this would be A, as I've got the red here. This would be A, this would be B. And so if this black count holds out from here, we would just follow that up for 5 waves, right? So 1, 2, 3, 4, 5, and that would probably give us, the end of wave 4 on that. So, as long as we break out above this swing high here, whether the bottom's in or not, we've got further to go up there. So, we've still got upside on that. The only thing that gets kind of weird, a little kind of crazy here is if we drop on down below this wave 2 here. If that happens, there's a couple of different ways I think maybe we can look at it. We might be able to look like this is a 1 here. So maybe like a leading diagonal here. This is a 1, and then this is ABC, ABC, and then 1, 2, 3, 4, and 5. And we'll just get a little lower low maybe to this this structure right here, right around 28,315. Maybe. And so it just gives us this ending diagonal as part of this flat correction here, and then we'll go up if we drop down below this swing low here. So I would look for this blue structure here to be the bounce. And, the 15 minutes oversold as far as it is. The 1 hour is almost there. So, we could be waiting to pull that down into that 1 hour, into that oversold, and then taking off on that. So, I mean, with this continuing to push down, that might very well be what we see kind of going on with that. You can also notice that this range here, the EQ of that range is right here, right around, just below the EQ of this demand structure here. So again, would be a good target for that. So again, this would be a 1, A, B, 1, 2, 3, 4, 5 here as an ending diagonal. And then we'd rally up on that. And again, that could just be A, B, C for 4, or that could be 1, 2, and we look for 3. If it's 1, 2, 3, just to kind of give you guys a heads up here, right around there. Yeah, see, I mean, if it's an A, B, C, wave C will equal wave A at around 33,800, which puts it right below that daily S1 pivot. So we could see this kind of get up to that point. If it continues rallying up through there, the 1618 up here at 37,300 basically would be that wave 3. So it'd be 1, 2, 3 up here. So, I mean, that's kind of what we're looking at. So if we get that breakdown below it, that's what I'm going to be looking for. I'll look for a nice rally, a nice sharp rally up out of here, and I'll try and go long on that. Unless I'm here yakking with y'all, in which case, well, I'll just have to find another entry on the way, right? So that's kind of what I'm looking for with that. Let me see here. Dancer Eddie, what's up, man? Dex is here as well, checking in from Amsterdam. ARM is here. Good to see you guys. Andrew Bennett says Bitcoin wave 5 playing out seems likely. I think you mean a wave 5 lower, right? Maybe. We'll see. I don't know what you mean by likely. It hasn't broken down. So I don't know about likely. I think it's definitely possible. But until it happens, I think, again, I pointed out a lot of reasons why, why it's quite possible that the bottom may be in. Not that none of that actually guaranteeing it, of course. But, I think with so much stuff kind of pointing at that, I think you've really got to kind of give it some credence until it doesn't anymore, right? You got to give it some real kind of value until it shows that it's not, I think. It's just trading, guys. Trading is all about your most likely scenario at the moment, right? You can't ignore other really possible scenarios just because you think it might be something else, right? But that's the whole thing. Are you a trader or are you an investor? If you're an investor, you're going to take those wider looks, right? And in that case, maybe you go, okay, yeah, it's going to go lower, maybe, right? But then again, you're looking at you have to be looking at a larger time frame. If you're an investor, you have no reason looking below the daily, right? Which means you're going to have to wait for it to go against you quite a bit. If the bottom is in and you think it's going to go lower, but the bottom's in, you're going to have to wait for a pretty good rally up before you actually get out, right? So, I mean, these are the different things you have to look at depending. Are you a trader? Are you an investor? If you're a trader, you got to look at these shorter time frames and go, well, there's a lot going on there. It's really quite possible that bottom may be in. So until it shows otherwise, we kind of work with that, right? I mean, that's how you trade, guys. That's if you're doing anything else, if you're taking that investor mindset as a trader, you're going to lose money. If you're taking that trading mindset as an investor, you're going to lose money. You've got to be realistic and look at the chart through the lens of which you're using, right? Same idea with trading, guys. If you're trading the 1 hour, why are you looking at the 5-minute time frame? Well, to get a better entry. No, see, here's the thing. Traders tend to overcomplicate, especially newer traders, tend to overcomplicate trading because they're so scared about losing money. So they want to get in the very small time frames and try to confirm to the decimal, where that reversal is going to be. Again, it's all about that finding the lowest point and the highest point, which, as I tell you guys, is really a fool's errand more times than not, especially the newer you are. Okay, so I don't think that's the way that that you should be doing things. Yeah, so. I think you just kind of, don't overcomplicate it. Don't use 78 indicators or anything, Like, I keep a couple of things on here just to, for you to kind of get an idea, if you're using different indicators, what you should be looking at, right? And how they can find confluence with other indicators. And the whole goal here, guys, is the same thing I do. Most people you go to, they're going to say, oh, the only way you should trade is this way. You should only do Elliott wave. You should only do Wyckoff. You should only do whatever the flavor of the week is, right? But the reality of it is all these things actually work. You just have to practice. You just have to learn them correctly and then practice them correctly and get good at it. That's all it is. And so that's why we don't force anybody to, that comes over to TWC, and we don't try to put them in a box and say, listen, you need to learn to trade this way. You don't have to. I spend hours every week, tons of hours every week showing you guys how to trade, in Tier 3, showing you how to trade different ways. The idea is to give you something that you look and you go, wow, that makes sense. That clicks. I understand that right away almost. And then you go with that. You work with that. Work with the thing that makes a lot of sense with you to begin with. All right? And so it's the same thing with the indicators. The indicators work. You just have to understand how they work. So I put them on here so that you can see. You can see when you're looking at, your VPVR, or you're looking at your volume and price action, you're looking at your RSI or your Stochh RSI or whatever, maybe I'll throw the Bollinger Bands on there or something. It's always so you can see that they all work together. I get the pivots on there, right? They all work together, guys. You just have to figure out which one makes sense to you. Which one, when you look at it, do you instantly go, yeah, it like in your mind, it makes sense right away. That's what you're trying to do. Okay? So, but, if you're on here using, 57 indicators or whatever, I see some people, man, they've got indicators all the way up half their chart. They got like 7, 8 indicators up here. God, don't do that. Now, the one caveat to that is if you are true, people say scalping and they're talking about, hourly trades. When I don't really consider that scalping. Scalping is like your 2-minute time frame, guys. You're trading on the 2-minute time frame. That's scalping. Now, when you do that, you'll usually have more indicators. Because you're looking for very short-term opportunities. Now, if you're trying to trade on the 2-minute to say go long for the day, no, don't do that. That's not it. When you're scalping on the 2-minute, you're looking to get in, make a few bucks, and get out. So you usually use multiple indicators to kind of get some kind of confluence in a reversal happening, because it's a very short time frame. You've only got a chance, a short time frame to make a few bucks, and that's what you're trying to do. So that's the way that I would change that. By the way, guys, we are having issue at the moment with the way that the bot recognizes free trials, or what it says it's free trial with the $13 thing, right? That's why we have to do it for the back end that we use. But we will get you, Adam or myself, as soon as possible. We'll get you your access in there. If you go through and you try to set up your access in your account, you need to do that, but the bot still won't recognize it unless you get through the 7 days and you do the first month, and then at that point, just the way that the bot's programmed, it recognizes it then. But we will get you in there. I'll jump in there if anybody's joining right now. As soon as this is over, if Adam doesn't have you already, I'll jump in there and get you access right away. So just kind of a heads up there, because we did notice we were having that issue with the bot. Go figure, right? We do this first time. Let's see here. Bill, what's up, man? He says UK inflation now at 9%. Yeah, I know, right? Kind of crazy. But of course, when it gets to these extremes, everybody thinks, oh my gosh, it's never going to stop. I still have people swearing up and down that we're in hyperinflation right now, in spite of this. In spite of this, guys. Look at this. January of 2021. Look at this, guys. The demand for the dollar continues to rise. I've talked about it over the last year. The fact that we're entering this liquidity issue with dollars. There's more demand. It's making it difficult to find the dollars, which is pushing the value up. People want dollars. You say, oh, but the Fed printed all these. It doesn't matter what the Fed does. It matters what happens at the bank level. Because until those dollars that the Fed prints come through the bank to you or the government or somebody else, it doesn't matter. It absolutely does not matter because it's not in the market. And here's the other part of that. If it comes to the bank and then you take that money and you pay off your debt, you are destroying those dollars, guys. When you pay off debt, when you pay off your credit, you are destroying dollars. Guess what? When you take that money and you stick it in the bank, guess what happens? Disinflation, depending on how much it does. It has a potential for disinflation, at least. Potentially deflation, because those dollars are not going after anything sitting in the bank. What else is going on? The Fed wants to do QT, right? Wants to Guess what's going to happen when they do the quantitative tightening? All that excess cash is going to get sucked right back up, go right back to the Fed. That's what it does. How in the hell do we have, sorry guys, hyperinflation if all that's good, if all that's happening, if all that's been happening? How? But see, people online, they don't want to listen, right? They don't want to think. And they're usually pretty rude about it too. They usually think, it's okay to be a jerk. I don't know. I don't get it, guys. I hope y'all don't act like that. It's stupid. It really is. So what are we looking at with the dollar here? Well, like I said, I think we might have had that wave 3 topped out here. We were looking for it potentially go a bit higher. I think it may have topped out here. In which case then I'm looking for maybe this to come down. So I think wave 4 here might actually hit this 50% right here, right at this supply block right here. So we can kind of draw that in there. Whoops. There we go. Can't get in there. There you go. So supply block in. I think we might see it rallying up to there. A, B, C. Kind of throw this in here real quick for my people. Because we were looking at potentially, the initial target was the 38.2. And that's where we got, and then we pulled back, but then we started rallying up. So I'll let Discord know that, hey, if we do that, we'll look up here at the 50%. And then we'll look for the breakdown. And if we do get that, that'll give us 61.8 here at 102.266. All right. And what that'll do, I've got it as a 1 here. But basically, 1, an A, whatever it is. It may just be an A, right? As you can see here, that gets us right above the 23.6 here. This is a wave 4, 38.2. Yeah, that might, I've got it, like I said, as a 1. I think it might be an A. So you get an A, you'll get a B, and then you'll get a C down here. We're looking at this 38.2 at around 99.81. So yeah, that's kind of what I'm looking at now. The only thing that would change anything on that is if we rallied and broke out above wave 4 here at 103.93, 931. In that case, we would assume 1, 2, 3, 4, 5 here. So 5 down, 3 up, and then 5 back down there. So yeah, that's kind of where we're at with that. So yeah, I think that will leave us to see the euro, print one more higher. Maybe euro's just finished 3. It's pulling back on 4 right now as well. Or it will be as this kind of rallies up, right? So as it's working here, the euro's doing the same thing, just in the opposite, right? So yeah. Let me see here. Wazobia, what's up, man? Vadim, good to see you, checking in from Seattle, man. Want to go over there to the fish market over there? What's that, Pikes? Want to go over there sometime, man. Let me see here. What do you got here? Vadim says, I like the flat idea, but need to pivot B at 28,000. Let me see here. You're looking back over here. Bitcoin. Yeah, I mean, that kind of gets you right there at this lower point here. That becomes that flat right there. Um, 1, 2, 3, 4. Yeah. Yeah, it gets you right there in that area. Yeah, I mean, I kind of like it too, as much as we push down. Well, we got to get further down first. It may not get down there. But if it does, I mean, that's the way I'm looking to play it. And I'll look to buy a nice rally out of this area here if I'm not sitting here chatting with y'all. Yeah. And then look for, again, that target up there, running up there. You're getting more and more interest in this area here. So as this has developed, this interest has continued to raise here. And it's really kind of this kind of area right here. It's really kind of kicked in a little bit. Let's see here. Yeah, so you've got this up here at the top. You've got the volume coming in. Up here, you've got the volume coming in again. So you expect that drop down, which is what we got. So again, could continue on down into this area here. Other than that, yeah, this volume right here breaking down through this support right there. That's why the volume came in right here on this one. But that's all you got, was you got the volume there just to break down, and then it kind of just went on its own, right? Moved up here, volume came in, spiked a bit higher. You've got volume divergence, right? Comes down, volume drops off, price drops off, rallies back up. And then as you get ready to drop on through this level here, that's where you get that volume kicking in right there as it gets ready to push on through this support right here. Now, volume has continued to kick in as we've come down, but look at the candle spreads. Look how they're getting smaller here. So we want to watch that, right? We want to watch that. This big volume, this big candle spread, a little bit less volume, but a lot less candle spread. Lesser volume again. So far, lesser candle spread here, with another 24 minutes left. So anything can still happen, but you definitely want to watch it as it's coming down. What you want to see is really what looks good is when you have that increasing volume and those smaller candle spreads coming in. But if you see the candle spread shrinking, you see the volume shrinking as well, again, that's kind of giving that idea that that the supply just is drying up, right? It's not continuing to push down like that. If you see this volume continue to expand like this, and you see these candle spreads continuing to expand, that tells you that the volume is coming, that supply is coming in greater and greater. It's trying to push down. It's trying to sell down. As long as you don't see that, well, then it starts becoming interesting. You start looking for potential, whether they're temporary, just bounces or actual reversal bottoms. That's what you're looking for in that point. Let me see here. Job, is that Job TV? What's up, man? Good to see you here. Silvio, good to see you always. Mark Chenard is here. Let's see here. Let your people know. Yeah, that's what I said. How long would we be down where, Chance? Where are you talking about? Right here? I think if we hit here, it would be just a nice... I think we should have a pretty sharp rally back up. I don't think we should really spend any time like this down here. I think we kind of get down and go up. Why? Because, again, that 15-minute is already really oversold. You've got a lot of volume coming in. You got little... I mean, look at all this volume is coming. You got these little tiny candle spreads. There's a lot of demand showing up. Overall, supply is still winning out, but demand just continues to show up. So at some point, if this continues as we get down to here, at that point, supply is either just going to get worn out or it's going to just give up. And so we should see a good rally right back up, I think, when we sit there. We'll see what happens when we get there, but I think, maybe more along the lines of something like this. To move down and then back up. Let's move down, back up. That's what I'd be looking for. Let me see here. Oscar says Apple and Tesla just fell the weekly S1. Yeah, no surprise, right? We all know it's all going down over there right now, right? We know tech's taking the brunt of it, right? Yeah, and that's everybody's kind of. I don't know. Everybody needs to have a narrative. It seems like, right? Everybody wants a narrative, but that's because they believe news moves markets, right? I think your narratives result from the market. It's not that the narrative gives you the market movement. Again, the idea, the way in which I trade, the way in which I view the market is that the market itself, right? That social mood is what goes into the charts. The charts is just representing that. That's right. So most people have it backwards. They look at the chart and go, oh, the chart's doing this, so this is going to cause investors or traders to do that. But you get knee-jerk reactions. But in general, what's going on, The actual trend, the larger term trend of the market is absolutely determined by what's going on with the social mood. How are people feeling? Because here's the thing, guys. If they're feeling good and they're feeling like, hey, I want to make some money, they're going to put money in the market. They're not going to feel good because how the market is. They feel good. They put money in the market shows it, right? If they're not feeling so good, if they're feeling concerned, if they're worried, they're going to start taking money out of the market, right? Or shorting. And if they're doing that, then the charts go down, right? This is how this works, guys. But I'm telling you what, even a lot of your really advanced, stock traders, whatever, they view it the other way around. And they tend to be right on the, the knee-jerk reactions to news sometimes. Not even all the time, just sometimes. But their overall understanding of what's going on in the market is always reactionary. It's always, they're like the Fed. They always react. Don't react to the markets, guys. Act. Make sure you're in it. So many times over the last few years, especially, guys, we've come in at the bottom and just made tons of money. Our tier 3 members, right? Because we're already set. We're already set when the market gets to shift, when the market moves, right? And that's the way it should be. You shouldn't be chasing the market. You shouldn't be chasing the market, okay? Let's see here. So that's what we're looking there. Again, DXY we already looked at. Let me see here. Let's see. Okay, so this is kind of like the bigger picture here. This is what we're kind of looking at here. So, volume kind of doing its thing here. We've got, here on Coinbase, we've got a bit of volume increase as we drop down here. And then, of course, a pullback as we rallied up here. And really, it was this drop right here where we got that large volume, right? So right now, potentially looking at that as a swing failure pattern right here, a bullish swing failure pattern. In terms of Wyckoff, we look at it maybe as a spring, right? Because it dropped down below and closed back up above it. Same reason for the bullish swing failure pattern. This gives us a potential test right here of this. So what we need to see with this candle is we need to see a higher low, okay? A higher low, and we need to see volume. The lesser volume is than what it was last week, the better. So if we could, say, close out this week with volume down here, right, at like half of last week and get us a higher low, that would be a positive development. Now, we still want to see price rally back up there, but as far as looking at it where we are locally, that's what we want to see. Because what that tells us is it's trying to push back down again, but there's a lot less supply. They're testing, they're seeing, is the demand still there? And the demand shows up in that case. And so there's no reason to continue selling into it because the market wants to be bullish at that point. The market wants to buy up, right? So that's what we're going to look at as we develop that there. The other thing you can look at is this this descending resistance here. And so what you're really basically looking for is a breakout above that. A breakout above that should coincide, if we get that, should coincide with a breakout above this this kind of descending wedge looking thing we got here. See, there's the other thing. We have a potential throw under of the wedge, right? So throw unders of the wedge usually result in a nice strong move back up here. So again, if we're getting toward the bottom of that, even with the with the changed wave 2 with the flat there, pull down here, we look for a good rally back up, and we should. If this is correct, if this is a throw under here, we should expect a nice move back up here to the resistance and then a breakout. If this is a bullish swing failure pattern here, we should expect a move up here to the top of the range, at least. Likely, and if we get up there, we're likely going to break out and head up higher, right? So these are the way these things generally work. If we're looking at pivots here, right? If we're just looking at the pivots. We dropped down, we rallied up, got rejected pivot, came down, found good support so far here at the S1 pivot. So if we rally back up above this swing high right here at 48,240, right above the pivot there, that should signal that we're going to run the pivots, which is, 150,000 or so up here. At least. It doesn't mean we have to stop there, but I just mean when you're trading pivots and you have this setup here, this is what we look for. Now we look for a rally and a breakout above this, a close above this swing high, which is right there above that pivot. And then we're all but guaranteed to run through the pivots all the way up, and potentially a bit higher. So, depending on however you want to look at this, as long as we get the turn and the reversal on that, we'll be looking for that, right? Yeah, so, but, if we break down through here, of course, our general target's 22 and 20. Depending on how this is playing out here locally, again, if this is just a wave 4 and we've still got a wave 5 to go, right? So if this is 3 down here and this is 4 playing out here, depending on what's going on here, so here's the thing. We could look at this as an ABC, right? As an A. And we're looking at this as ABC for a B, right? But if we break down here, it doesn't necessarily invalidate the triangle. We could have a W, X, Y, X, Z if we can get all these as 3s. Which is another corrective pattern. It's acceptable, right? Or even A, B, C is W, X, and then Y, right? So W, X, Y give us a wave B here, right? But the key to the triangle is the breakout here. If we break out above that swing high, then the triangle is invalidated. Because this would be A, and you're not going to have that breakout there. Unless, of course, you had like a, again, the inverted symmetrical triangle, the megaphone pattern, right? So it'd have to be A, and then you'd have B, and you go up higher for C, lower for D, higher for E. But again, that's such a rare pattern that, we don't really worry about it until it's showing that we're getting these higher highs and lower lows, maybe developing into it. The reality of it, guys, is we're just going sideways. So there's a lot of possibilities while you continue to go sideways. There is no easy way of determining what the price is going to do. You'll have people that will talk to you and try to convince you that it is. They'll try to convince you that whatever they think is going to happen is absolutely what must happen. The worst thing that can happen is somebody like that gets it right. They get lucky. Because if you're new and, new to trading, you don't understand that was luck. They probably don't understand that was luck. But it looks like they know what they're talking about, right? That's the problem. If anybody's guaranteeing you that price is going to do something, or guarantee that price is not going to do something, I would be very cautious with that, because those of us who have been trading for for a significant period of time and been successful at it, we'll tell you all day long there are no guarantees. And so for somebody like me that's been doing it, almost a quarter of a century, right? I still get it wrong sometimes. And that's just part of being a trader, guys. You can't possibly know everything that could possibly happen at all times, right? And so then leading to what, some definitive movement of what's definitely going to happen, right? This goes on the weekly. But, if you watch social media, that's what they tell you, isn't it? By the way, you notice here we're finding support kind of right now at this, at the range low there. Did right here again, coming back toward it one more time. So that's interesting there. But trading, guys, trading is about possibilities and then whittling them down to the probabilities, and then kind of putting your probabilities in order. What is most likely, which is again, as I taught tier 3 with the Elliott wave, the great thing about it is you kind of it helps you figure all this out. It adds structure to the chaos, right? And it has definitive rules and guidelines, right? And so the more rules and guidelines that a specific probability follows, the more likely it is correct. So it becomes your primary, right? But if it peters out, if it doesn't work, then you've got your secondary, right? You've got your alternate count, which you should be updating along the way. So this is kind of what we do here with this. You get one count there for the black count, right? The bullish count. And even within that, you've got other possibilities there, but then you've also got this potential bearish count. And as that develops, all of a sudden, originally we had it as maybe a triangle here, right? Maybe A, B, C, D, E, right? And then we broke out above that. And so that invalidated it. So, but the other part was, well, if it gets invalidated, it doesn't mean wave 4 is necessarily not correct or not going to be there. It means maybe A, B, C, right? But then as we continue to work this here, again, I've given you, we continue to update the possibilities of what may be happening with that price action as it works. I mean, that's what we're doing there. Now, this is getting pretty close to invalidation here. Invalidation happens on Coinbase at 28,605. So if we get through that 28,605, then again, we're going to look down toward this blue structure here. 28,315 to about 27,9, 26.5. That's that range right there. So we'll look for that next if we lose that support there. And again, a possibility A with, a flat correction here. Possible. I mean, this is an ABC here. Maybe could be a W, right? And then the problem is this looks like a pretty clean 5 up. This is the problem. But obviously, if we drop down below here, it's not going to be 5 up, right? So maybe it would be something like 1, 2, 3, 4. So 1, 2, maybe 3, 4 here, and 5 up here. So that gives you an A, B as a triangle, and then C as the thrust. So, again, you could have this as a W here, and then an X, and then A, B, C as a Y, right? So this could still be wave 2 over here, just ending over here. So 2 possible wave 2 counts, right? You have the flat, or you have the W, X, Y. But in either case, they would still look to, find support right around this level. And if they do and rally back up and break out up here, well, in either case, they're still going up toward the same general area. So you don't have to know which one is correct right now. You just have to understand that they're both going to do the same thing, right? And again, if you break out of this up here, well, all of a sudden, you still have a potential wave 4, and it's still going to the same place, right? So you got 3 possible counts, all going to the same general area, more or less. And you can figure it out as it's rallying up. But that's what it means to trade, guys, right? It's not like, step out there, go, well, I think it's going to go right here, and that's it. You always have to be aware of what the possibilities are, and work with them as price continues to change, right? So if this is, say, an ABC or here a WX and a Y here, let me see. I don't know. I can maybe get like a leading diagonal out of this to get an A and then a B. And then this would be 1, 2. And this would probably be 3, 4. And you get that 5 down there for C. If this was a W, X, Y, this is A, B. And so then this is working it down here. 1, 2 maybe. 3, 4. Still get that 5. So again, whether it's W, X, Y or, ABC, you can kind of count either way. You can still get to that same target there, right? What's up, high or low, Crypto? Good to see you, man. He says, right now is the best time to take a vacation. Let me see here. Just in time, what's up, man? I see you there. Is that Diego? Yeah, I can never read your name, man. Good to see you. He says, just went long Bitcoin again a minute ago. Yeah, again, may just be like a wave 4. If we look at this, that 38.2 gets you up here around this area. It makes a lot of sense, right? So if we pull this demand over here, this demand structure in this wick over here, that 38.2 gets you to the bottom of that, gets you around that 65. 61.8 is the EQ of that right there, right? So you dropped through it, came up, rejected around the pivot, came back down, rejected the pivot, sent down lower now. So, yeah, I mean, you might be able to get a rally up toward that at least as a wave 4 before heading down a bit further for wave 5. If we get to at least to the bottom there, if this is a 3 down here at the bottom, and we get up there, look at that. At the top of this structure is your wave 5 target with that. So, yeah, again, it would work. It would make sense with it as we do it right there, right? Let me see here. Yeah, man, I think, Again, I think we go up. I think regardless of if this is wave 4 or if the bottom's in, I think we go up. Now, here's the other thing. If we continue to go down here, we got to figure out, well, how is this wave 4? And I don't know. This would maybe have to be like a WXY here or something, I think, maybe. So maybe like an ABC, W, ABC, Y, ABC, or X, and then ABC is Y, maybe. And that could get us a wave 4 done up there. I mean, if that's wave 4 and wave 4 is done here, I mean, generally speaking, our target based on the height of wave 4 there, right here around 22,183. So again, the 22,000 level I was telling you about. Everybody wants 20. I don't know. I think 22 may front run it if we get down there. So yeah, I think there's a possibility there. What do you guys think? You think maybe get front run if it gets down there? Not what you hope. What do you think? Because everybody kind of wants that 20, right? So yeah. Let me see here. GBTC still doing its thing. Again, I talked about the idea. Maybe this is a 1. Then maybe this is 1, 2, 3, 4, 5, maybe, or it could be 1, 2, 3, 4, and 5. Still a little bit lower to go down. Maybe toward this 61.8 here at the top of this high volume node, 1281. So if we got the further drop in Bitcoin, we'd see GBTC drop a bit more, and then potentially rally up from there. But again, GBTC only has. It has 1, 2, it has 3, 4, and then for this right here, it looks like it only has 3 up. I don't know, maybe you can finagle something in here to get you 5, but I think you really gotta, it's usually the easier count, and I think you'd have to zoom in and really kind of work with it to get something different in that, right? So I don't know. We'll see with that. But you can see all through the drop here, volumes continued to drop off until we hit that swing low. That's been your first rally up in spikes, right? All your other spikes continue lower, right? Even here and then to here, down here. I mean, so no one left there. So I think if we see some kind of good rally in GBTC, we'll see Bitcoin rallying with it. It's not going to do something different because, again, Bitcoin's that underlying asset, right? Let's see here. Just in time says the 38.2 of the 2020 low to the all-time high is a good-looking level. Fits the theory of alternation too, and I suppose the 50 would too. But if we're talking about front-running 20, the 38.2 looks sweet. So you're talking about. Let's jump in over here real quick. Where's that 38.2 here? I've got Coinbase up here. 23,359 kind of area, 23,350. My only thing about that 38.2 is that it really has nothing there, right? It just kind of goes up. The 50, I mean, at least the 50%, we've got kind of this whole sideways thing going on here for a few weeks, right? So this 1, 2, 3 weeks of sideways here before it rallied back up. So it rallied strong into it, went sideways for 3 weeks, then rallied up out of it. And so that kind of gives us a base there. So that's kind of right below the all-time high, or right around the all-time high there. I mean, it could just get right to the top of that and go. Where's this all-time high here? Let me mark this on here. Whoops. So for Coinbase, it was, what was it? 891.99. So that would be right there where, it makes sense, right? It rallies up to that all-time high. 3 weeks of kind of sideways consolidating up toward it and then break out on volume there. So, yeah, I mean, it's a little bit before the 50%, but, possibly something, right? Or did you put this on log? Oh, I've got it based on log there. That's what I've got it based on, yeah. See, if you don't base it on log, because it's such a deep thing there, you get your 78.6 right there around 18,000. You get this, the 65 right there around the swing low. 61.8 kind of where we're at right now, a little bit below that. But, again, using that large kind of thing there, I think you've got to use that fib based on log for that. It's just because it's just so far, right? It's the only way to make it visually correct. Again, you're buying, you're buying for a 10% profit, right? You're not buying. So at $1,000, that means $100 up and you got your 10%, right? But at 10,000, that means $1,000. At 50,000, that means $5,000, right? So the only way to properly see that on the chart is to use that log scale, right? Which then means that we should be using that log on that fib right there. Yeah, I think it just makes the most sense because again, we don't look to make $100, right? We're looking to make 10% or whatever, right? And so as price rallies up higher, that 10% is going to be more and more and more. And as it comes back down lower, it's going to be less and less. So we don't want to look at that arithmetic when you've got that large move. You want to look at that semi-log scale. Yeah. Higher low, you think is going to be front run for sure? Name Mr. Wilkes, what's up, man? Good to see you. Yeah, so, we'll see how this works out, guys. Again, it's always a work in progress. If you're trading, your chart should never be static, guys. It should always be a work in progress. You should always be working with it to figure out, okay, where are we at? Where do we need to be? What's going on with all that as you do it? You should never be, just things staying as they are, especially the smaller time frame, guys. You've got a lot more price action. You've got to look at that price action, which is why it makes it so difficult for newer traders to get in there and trade the very short time frames. Because there's so much noise, right? There's so many different possibilities going on with that. Yeah, I haven't bought yet, Wilkes. I haven't bought yet. Definitely look back. I'll be done here within the half hour. Definitely look back and check it out and see if see what I said about where I'm looking to potentially buy and depending on the possibilities of what's going on here. Again, just as a quick. Going over it here, it seems to me like whether it's wave 4 that's playing out right now or the bottom's in either case, I think we've still got a little bit higher to go maybe. So we'll see. We'll see how that works as it gets through those levels. We've got to get through. By the way, guys, have you paid attention to Target? Look at this right here, guys. They missed on earnings. Look at this right here, earnings, right? Whoops. If you guys haven't seen this chart, man. Earnings. There we go. Look at that. Look at that miss. Estimated to be 307, came in at 219 a share. That's a huge, huge miss. And so this led this right here, this day, right? Right here. So the 18th of May, which is this day, it dropped 27.91%. That was the largest single day drop in Target's history since Black Monday in 1987. And we talked about Black Monday, right? A big, huge drop. Yeah, that was the biggest single drop since, and it continues to drop here now, right? So, well, we've got this low over here, a little bit lower down, right? And right now we're still trying to push lower into that. But man, oh man, that's a big gap down on that earnings miss. And it continued down, buoyed up. You got a little bit of a reaction off that, and then continued lower. People still trying to sell to get out. But there might be an opportunity coming up to buy this. That's a huge bit. You're oversold. This is the daily, guys. Well oversold on the daily. Stochc RSI basically bottoming out there. 3-day, we're down here. We've dipped into it, right? And so now we've got this bullish divergence here. Right here, right between the swing lows. And we've got the 3-day Stochc RSI. It didn't bottom out, but it's starting to curl a bit. Potentially signaling that a bottom may be coming in. That's huge. Look at that volume, guys. Look at that volume. That 3-day volume. It hasn't had that much 3-day volume since back over here. Look at that. At the Great Financial Crisis, October of 2008, guys. What happened here? This. That was the last time we had that kind of volume. So target may get you at least a bounce up there. And here's the thing, guys. If we're getting a bounce up there, I think the gap fills in. So, I mean, you've got potentially a good bit of upside on that target. It starts rallying up. So I would definitely be watching that. The weekly, of course, we've dipped down into oversold here. Stoke RSI is just about neutral, though. Right around 44 or so, 45. But yeah, look at that. Yeah, craziness. Looks like on the weekly we had some volume on this drop here in was that March of 17 on this move down toward the bottom. You know, it rallied, it bounced a little bit and then dropped down and then went up. Again, over here with that volume was, you know, toward the end of this, right? Right here, came a little bit further and then it rallied up. Excuse me. So, you know, maybe we see that, right? Again, these big volume spikes coming near the bottoms, right? Not at the bottoms, but near the bottoms, right? By the way, this was Black Monday over here, right here in this right here, coming down. But look at what was going on though, guys. Look in the chart here. Look at the warning. God, look at this. See how this is going up here? It's making higher highs, right? But look at that volume. Just a little bit more here. Gets to the top, kind of pulls off, right? Gets up there, you get a little bit of support on that rally. But look what happens right here. Look at this big bit of volume. And look what happens with the candle here. Huge bearish engulfing on the weekly. That's a warning, guys. What does price do then? It drops down, it rallies back into the wick, right? Into that supply structure there. Look at where it ends. Right at the EQ. If you were looking at this, man, oh man. That tells you this tells you that you should probably be worried about that being the top. And sure enough, look at that. Big move down. Look at that. Even gapped a bit here, trying to coming down. So drop down, pushed up, gap back down toward that low, continued to fall. Fell further, bounced up, fell down a little bit more, and then started rallying back up. So, you know, again, with the size of that drop, whatever, I don't think, you know, it's the bottom, but I think we might get a bit of a rally. Now, do we fill all that gap in on the daily? Maybe not yet. You know, this is the swing high up here, right? So, you know, quite possibly 1, 2, 3, 4, 5. And I don't know, you know, 1, 2, 3, 4, 5. And then we'll get, and that'll be A, and then we'll get B up, and then we'll have C fall down further. I think this may be what we're looking at. So this may be wave 3 here. If we look at this in relation to targets, no pun intended, that gives us, see, this got this wave 3 down here. But again, I think with this depth of movement here, I think we probably need to use fibs based on log scale. And so that gets us pretty close there. So maybe it's wave 3 of 3. Maybe this is a 1, 2, 3. So we'll get 1, 2, 3, 4, 5. Gives us 1, 2, 3, 4. Right back up to this area right here. And then 5 probably down here. Let me see here. Yeah, look at that right there. I think that's probably what we're doing. I'm going to go ahead and throw this count on here for you guys. So I think that's 1, 2. We'll get a 3. We'll get a 4 up here. And then we'll get a 5 down here. And that'll be A. And then B will rally back up here. You know what? Let me go ahead and throw this on the smaller time frame so we can see it. This as well. Yeah. And so then, you know, this would be basically A here. And then we get a B up toward wave 4 here, and then C down. Kind of idea. If we look at 100%, so we say, okay, maybe right here at 77.22 is where wave C would equal wave A, 100% right there. Yeah. Where does that get us? Oh, that's a good area of support. Look at that. That's a great area of support there. So I think that's kind of my working count at the moment here on this larger time frame, guys. I think we might get a bit of a bounce here, if not today, within the next few days. And so that'll just be like this 1, 2, 3, 4, 5 around that 137 area. And then we'll look for a rally up toward that S1 pivot on the weekly. And then we'll look for a drop down the S2 pivot. At least, right? Look at this. This is the high volume node right there. That's our target, right? And then wave B up to wave 4. Initial target gives us an initial wave C target down here, 77. Could go further, though, as it plays out there. So, yeah. I think that's probably looking kind of interesting there. Qs, remember I called this top up here? Back there last year. What was this? This was November. So, yeah. Remember we were looking at the Chuvashaw fork here? I haven't had anything onto this chart. This is the chart I had, guys. So there's that Chuvashaw fork, and we talked about the breakdown through that, indicating that the top was probably in. And sure enough, look at how far we've fallen then. We had our target right here initially. And so we got the bounce here, and then it fell through and got it, and then it fell through and rejected. Continues lower, man. Cube's just looking awful. But yeah, man, top in there. MicroStrategy. Huge move. There's the weekly. Notice where it's kind of finding some support here and bouncing back up off this high volume node area. Rallied back up above that S1 pivot. Closed back up above it. Here it comes pulling down again. I think initially you can just look at usually when you leave a large wick like that, whether it's to the top side or the bottom side, most often price will return 50 to 61.8. So 50% down that wick or 61.8 down that wick is usually where price will pull, and then it'll rally back up. So if you can get that, it usually means that's probably a bottom in that. Just a real quick look here. Could be maybe like an ABC as a W, ABC as an X, and then ABC as a Y. So, MicroStrategy may be something looking to buy there. This is the weekly, by the way, guys. Notice that we are oversold here. And Stochh RSI as well, just about bottomed out and oversold. Weekly closes today, right? So, maybe something worth watching there. But, on the shorter time frame, again, it could fall back down a bit. If we zoom in here a little bit, let's try the 4 hour. Let's see if we can see anything. Yeah, I can see 5. I can do 1, 2, 3, 4, 5. A, B, C. Pulling down into it. We're still, well down here. That'll pull this back down a bit. And it'll give it Stochh RSI time to get down. So ABC working on here. If that's 5 up, like it looks like it may be. Yeah, see, it's 61.8 right there at the EQ. And it's also, if you'll notice, this 4 hour demand structure right here in this wick. By the way, guys, just in case you think, the demand structures and supply structures aren't always in the wick, as I showed you there on Bitcoin. But yeah, look at that right there. That EQ is right around the EQ of that weekly demand structure there. So a lot of confluence in that area. Wouldn't be surprised to see it heading down there. Maybe get us a 1, 2. And then that could see maybe a 3 up here at around 381.64. Unless it's an A and that's a B and a C, in which case then you'd be looking here around 276.91. So probably a little bit higher to fill in the gap. Probably up here at around 294.74 where that one closed. Fills in that gap there. It's the 6th of May. It's the 9th of May. It's a weekend gap. Not too worried about if it's a weekend gap. But yeah, so right now that's my kind of working count on this. I'm looking for breakdown toward this level. Then looking for a breakout up here at 219.80 because that would be that wave B. And if we can get that, that should confirm that bottom's in at that point and we're heading up higher, at least to 270. I don't know, probably at least around here to 295 or whatever, 296. Potentially up here for a wave 3 at 381.5 kind of area. Let me see here. I got a couple more I wanted to look at here real quick. XHB is your home builders ETF. Looks like we've got 5 up. Once again, March of 2020 being 4. And then 1, 2, 3, 4, 5. If so, I'm expecting wave 2 to come on down here right around this 50% retracement at 26.25. What does this tell you? Well, if the home builders ETF is dropping off, that means home building is slowing down. And again, so when you think about prices and what's going on with the market and everything, you've got all that falling off. That goes in line with the things I've shown you guys about mortgage rates rallying. Again, the highest movement, 3-month movement in history, or pretty close to it. We went from like about 2.1 or 2.2 in February mortgage rates to 5.1, 5.2, something like that right now. March, April, May, 3 months in. It's been crazy, guys. It's been a crazy ride. I'm trying to buy a house. Crazy stuff, right? But nonetheless, I've mentioned also that homes seem to be topping out a bit. I think that's true maybe for the for one sector of housing, but it all depends on your income level with that as far as what may or may not be happening. Those hit most by higher prices, inflation, mortgage rates, whatever. Usually, I don't know, in most areas, that's going to be your 400,000, 200,000 kind of level. I think they're going to see the most impact right now. If you're looking up at 700,000, a million, million and a half, I think they're still going to be elevated for a bit. But we are starting to see some of them coming down. So, but some were still up. I was looking at a house this past weekend, over in Houston. What was it? 730,000, I think is what it was. 7,000 square foot, 730,000. That thing has already got a contract and an offer accepted. So I saw that on Saturday. By Tuesday, it already had an offer that was accepted on it. So, it still kind of depends where you are within the pricing of the homes and whatnot. But I've also seen, another one, 1.3, which has dropped recently to, for whatever reason, it can't seem to sell. It's a very nice home. If it keeps dropping, I might buy it. But it's dropped down to about 1.1 now, so $200,000 off. You're looking like, 17, 18% drop in one swoop. So, again, a lot of it's going to depend on, your price levels as far as housing goes and how it's being affected. But the other part of it is also going to be, as always, location and stuff like that. If your house is sitting on the market for more than a couple of weeks, you're probably going to have to lower that cost, the price, because what we're noticing is they're going to stay on a lot longer if you don't. Your house really needs to kind of sell in the first week or two to kind of keep justifying whatever price you've got it at with the market the way it is right now. So we've still got that going on. Carnival Cruise Lines looks interesting to me. I've got this as 5 up here. It's possible we've got an ABC down here. I can get 5 waves up as a leading diagonal here. So basically, ABC is 1, 2, ABC is 3, 4, ABC is 5. And then, basically a WXY here. So if we don't get a rally off where we're at the 65%, I'm looking at this lower bright blue kind of demand structure here. Somewhere between that 70.5 and that. So that's 1160 to 1187 or so. We'll look for a rally off that. If we can get this, wave 3's got a minimum expected target of 51.42. So that's definitely interesting. Of course, I don't know, if we look at this, there you go. So, the entire decline here, it's already had a good bit of a decline, right? Again, notice the very large movement here toward the end. If you're in with us with the Elliott wave, as we explained, your largest volumes generally will come in your wave 3s or your wave Cs, right? It's like your, a bit there. Look at that, 61.8 though on that. So I think there's a good chance that a Carnival might be putting some money in your pockets. We've got Bud here, the Anheuser-Busch InBev SA. This is, Budweiser and Corona and all that kind of stuff, right? I think we're targeting the S1 pivot here, right below this 50% retracement. You're going to look for a breakout. I guess if you really want to be a bit more risk tolerant, you can look for a breakout above this descending resistance here. But your stop loss absolutely has to go right below the swing low. It has to. What you really want to see is an impulsive breakout above that weekly pivot. Impulsive mean expanding volume, larger candle spreads, and close above that. If you break out above wave B up here at 67.91, that's going to add confidence to the count and indicate, hey, wave 3 is probably in progress up here to 125. During recessions, depressions, stuff like that, alcohol is usually a good place to be. People want to drown their sorrows, right? Losing their jobs, losing their house, whatever, stuff like that. So it's always a place to look. Costco is interesting. Costco's got a long way up, but as you see, the weekly is almost oversold. Stoke RSI is basically just about bottomed and oversold. We can jump out here to the monthly. Look at that monthly candle, guys. Big drop on down there. Monthly has a bit further to go here, but look at this rise up, man. God, dog, look at that. Costco, man, if you bought it down there, say on the breakout here, all the way to the top there, that's, almost 25,000% rallying up there. So it's got a lot of room, right? I think locally we might be able to see a bounce at this S1 pivot. If we do, I'm interested in an initial target here of this area right here, this supply structure right here. You see how we just pierced? You see how we created it and we went up and we tested it and went up further and then we just dropped right through it. Usually that'll have price reversing back up and rejecting at it and then heading lower. And then from that, the next target becomes this EQ here right around 319, 320. But yeah, I wouldn't be surprised to see this rallying off this area here and popping back up toward 460 or so maybe. So about a 12% rally, something like that, 30%, and then look for it to get rejected there and head lower. And then initially on a lower, maybe on a daily or something, they might get a bounce here at this EQ, rally back up toward, again, this kind of area right here. Which is right there, below that S1. And then drop on down further and continue down with that. So a couple potential plays in that as well. Let's see here. Dow Jones real quick. We are dropping lower. I've got this as a diagonal right now. Wave 5 target, potentially right here around this S2 pivot on the 1 hour, maybe the descending channel support. This area right here is what I'm looking at. It cannot go below. Let me see here. Wave 5 cannot continue to drop below right around 29,937 or so. If it does, it makes wave 3 the shortest, and we can't have that. So then the count's invalidated at that point. But I'm really looking for a rally from this area to head back up. What else do we got here? We've got, let's see here. We've got the NASDAQ composite here. So that was the Dow, right? NASDAQ composite, we've dropped down below the swing low here. We got 1, 2. Wave 3 as a minimum expected target down here at 9012.69. So locally here, this may be a 1, 2, 3, 4, 5 playing in, or even 1, 2 coming down with 3, 4, 5. But nonetheless, looking for it to continue lower down here. S&P E-minis, guys. Do you guys trade E-minis or E-micros? So we got this thing in the U.S. called the pattern day trader rule. Look it up. If you don't meet the requirements, you can only trade so much stock in a certain period of time. That doesn't apply to options. It doesn't apply to futures. It doesn't apply to stuff like that. So the S&P 500 E-mini futures, this right here, is actually the most traded futures in the world by like a long shot. It's huge. It's very liquid. So you can trade these all day. You can trade these on the 5-second time frame if you want. Do 1,000 trades a day or whatever, and you'd be fine. But make sure you guys are paying attention to that if you're in the U.S. We do have those rules. But as you can see, we did break down below here. We've got a minimum expected wave circle 3 target down here at 33.74. So still kind of come crashing down, right? Oil. You see here. The Twitter joke about Costco raising their hot dogs by $1 due to inflation was hilarious. Got picked up by some media outlets. Oh, I haven't seen that, man. I'm glad you told me. I'm going to look for that now. So like I said, with oil, I do believe, we've got one up here. Remember that all-time high is $140.69. This is WTI, light sweet crude, right? And so we've got one down here. We did a flat for wave 2. I believe it's done. It looks like we've got 1, 2, 3, 4, 5 down here. 1, 2, 3, 4, 5. And then A, B, C. Potentially done. We're looking for a breakdown below wave B here at 108 and 13 cents to kind of signal, okay, wave 3 is likely in progress. Wave circle 3. And in that case, wave circle 3 will have a target of... By the way, you can trade oil futures as well, man. Oil and nat gas. I don't know why people aren't doing these things. It's crazy. So much easier to trade than a lot of the stocks, believe it or not, guys. A lot more action with it, a lot more opportunity to trade. If you haven't done it, start looking ways to do it, guys. Wave circle 3 will have that minimum expected target right there around 92.68. A break, and that'll break us down below wave B here on the wave 2 flat. And so that's going to add confidence to this larger account and say, okay, wave 3 is on progress down toward 69.40. I think it's 69.40. I think it's where we're headed with that. I'll tell you in just a second. 67.35 now. So minimum expected target for the wave circle 3. Remember, this is wave 3 of A. So you can have 5 waves down for A, 3 waves up for B, 5 more waves down for C. So I wouldn't be surprised, again, I've talked about it before. I wouldn't be surprised to see WTI heading down there, and then Brent crude as well, down there in the 30s when it's all said and done. So again, everybody talks about inflation and the prices, and everybody's like, oh, we've got hyperinflation of dollars coming in, and oh, inflation's going to continue, going to kill us and whatever. And this is all I believe at the top, again, the extremes, right? So it's the market, the extremes, right? The market gets excited and they buy up here at the top, right? And then they get scared and sell at the lows, right? Buy, sell, right? It's that whole emotion. It's that whole psychological aspect. But yeah, I don't see right now. And I always say right now because things can change, guys. I need you to understand that. But right now, there's nothing going on. As a matter of fact, everything is the opposite way. To say, because people are out there saying, oh, $300 oil, right? Right now, I don't see it making that happen. I don't see it at the moment. Now, if we start breaking out toward that 140, well, then we'll look at it again and go, okay, well, is there something else maybe going on? But you have to remember, guys, we rallied to 130 whatever there from negative 42 or whatnot, right? Over the course of 2 years. It was 2 years ago. May contracts of 2020. That's when we had that negative, first time ever that we had a negative there with the oil, right? People were getting paid up to $42 a barrel or a contract there to take the oil. Yeah, so it was quite significant, right? And a few enterprising individuals did what I was talking about back then, which is they were able to find, which was hard to find at the time, but they were able to find some cargo ships, and they leased them out, and they transported the oil to the cargo ships, left them out at sea for a year or whatever, and it's just easy money. Made some really easy money on that as price rallied from that. Let me see here. Real quick, silver. Try it again. There we go. Silver. So silver may have topped out locally here, 1, 2. And so we're looking for a breakdown below 21,250. If we can get that, that should signal that wave 3 is in progress. Wave circle 3 has a minimum expected target down here at 1635. And again, that would lead to the whole idea that silver is going to, drop below 10, maybe below 8 when it's all said and done. So again, you'll get 5 waves down, 3 waves up, and then 5 waves down again. But we'd have to see how that plays out. But right now, locally anyway, we'll look for that breakdown right there to kind of signal, okay, we're headed down there, right? Oh, man, and gold. Finally gold, guys. Same idea as silver, kind of following the same path more or less here. I was looking at the possibility that maybe we might have a triangle forming here. So A, B, C. But that's obviously broken down. It's possible this could be a flat. So A, B, 1, 2, 3, 4, 5. Back up here. So, silver could have one more push up higher as well. Kind of like oil here. If gold pushes up. If this is like a 1, 2, 3, 4. That's why I'm looking at that. Up there around 1859 would kind of be that target we'd expect. If it drops down below 1805, in that case, it looks more like a WXY here, and it finishes out right around the 50%. That's all it is. Does it drop below there or not? If we're dropping below the weekly pivot, below the ascending channel support, most likely wave 2 is done over here. Well, wherever that high is, I think it's right here. And we're heading lower. It's just the breakdown through the wave, subwave X or B or whatever right here at 1805. That's kind of like the real thing, because at that point, this wave can no longer subdivide. So we're only 1, 2, 3 waves. 3 waves corrective. So that's why we would look to go lower after that. In case you weren't aware, guys. Yeah, SPX. S2 daily, yeah, down. What's up, high power coach? Happy Friday, man. Good to see you there. Anyway, guys, so that's kind of what I'm looking at here. Bitcoin still doing its thing here, right around, just right above that invalidation level. So again, this could be A, B, and C coming down here. Let's see here. Could even be, again, depending on how you want to count this. Do you count this as 1 here, A, B, and then A, B, 1, 2, 3, 4, 5 as an ending diagonal? Do we do that? Or do we look at this as 1 up here, and then this is W, or ABC as W, and then maybe we've got an ABC here for X, and then A, B, C for Y. And so then we have just this wave 2 instead of ending here, ends over here. In either case, a breakdown below that 28,605 is going to have me looking right here, right around this 50% level at 28,215. And if we can get a nice sharp rally out of that, then great. Now here's the thing. If this rallies from here and breaks up above wave X, well, the count stands as it is then, right? 1, 2, we look for a 3 up here at around 32,278.5. Okay? So I've got to go, guys. I've been here an hour and a half. As always, the only thing you control in the market is how much you lose. So please keep working on risk management. If I didn't get you your request today, I do apologize. I wanted to share some of those other charts, though, that are looking like there might be some some longs coming in for some stocks there. But I usually end up getting a few requests done, usually at least, but not today. So, but I'll be back on Tuesday, 11 a.m. Central Standard Time. As always, if you want to know about ADA or stuff like that, that's something that we do daily for Tier 3. And so you can join us. Don't forget, guys, you can join us here at howtotradetowin.com. And right now, you're getting 7 days for $13, Tier 3, full up Tier 3. And if you want to stick around for a month after that, we're going to give you half off your first month, $99. That's it. You should get an email 3 days before your expiration. That's letting you know that you're going to be, that or your renewal. That's letting you know it's going to be renewed. Don't hit cancel, guys. Don't hit cancel in your accounts on the site, in your account homepage. Just turn off auto renew. If you hit cancel, it's going to cancel your account immediately. If you turn off auto renew, then it'll just send you an email saying, hey, listen, pay this if you want to continue. And then when it's over, if you don't want to continue, you can just go ahead and hit cancel on it then. But don't hit cancel until your whatever your period is that you're on, your subscription is up. So whether it's the 7-day here or the monthly or whatever, just turn off the auto renew. Okay, guys? I hope you guys have a great weekend. Y'all trade safe. Be safe. Enjoy some time. Get away from the computers a bit there, guys. And as always, share kind words with other people. You've got a choice. In every situation, online and off, you've got a choice. You can act like a jerk. You can act like a good person, a decent human being. That really is as simple as the choice is. Why would you choose to act like a jerk? Why? Don't do that, guys. You never know what the other person you're talking to is going through at the moment. And there's a lot of people going through a lot of hard times over the last 2 years. Choose to be kind. It's a choice. It's easy. It's easier than being rude. All right? You see somebody on the street, just smile. They might think you're weird, but for the right person, that could potentially change their entire day, week, month, year. You never know, man. So there you go. I hope you guys have a great weekend. And as always, you can join us there. We'd love to see you at Discord. And I'll be over there in just a bit. Take care.